Welcome back, traders. We're back at the home office in Pennsylvania. Thanks so much for your patience. We got a mixed day of price action today after the PCE data came in line with expectations. Let's dive into the price action. The S&P 500 finished the day down 0.07%. Our NASDAQ QQQ is starting to show some semblance of relative strength. It was up 0.12%. Our IWM small caps were down a smidge, as was the Dow Jones. Noteworthy that the Dow Jones is actually beginning to show some relative weakness. Our ARK Innovation ETF was the best performer of these headline indices, and TLT is putting in a massive move. It was up 2.95% today. Volatility declined across pretty much all of these indices. We had a very mixed up volume, though. We only had 46.6% advancers. Our trend model is at a +3. Let's take a look at the S&P 500. We did get some brand new value areas. First things first, before we do that, let's backtrack and let's take a look at our sector map. Remember, this is what is leading us into a lot of these really good momentum trades. Our KWEB China Technology ETF, it's still in our number one momentum slot. And we actually closed out our Pinduoduo common shares yesterday. And we also closed our Alibaba common shares as well. The MSOS Cannabis ETF is starting to get some upside momentum. It's now in our number two momentum slot. And our gold miners as well, they were up 3.41%, which is great. We did see a mixed tape. The solar stocks were down 2.95%. And energy is now in our number two bottom momentum slot. So we're starting to see a reversal of the price action that we had earlier on in the year. Now let's take a look. Remember, we have to put this into context. We had a huge rally yesterday. And with the PCE data, we ended up moving all the way up to the trend line to rule them all. This teal downward trend line, let's just go to the weekly chart. That way you can see what I'm talking about. Check this out. Now this is a big level. Pretty much everyone in the market was watching it today. Let's move this over to the side. The rally had been stopped. Not once, not twice. This is the third time that we are testing it. And I would imagine there were a ton of players that actually shorted as we tested it today. Who knows if this is going to behave the same exact way and roll over from here? But I will say, over the last week or so, we've been taking a lot of upside targets. We've had stocks that have just been moving to our, 2 times our risk budget target, 3x our risk budget, 4x. So for that reason, just naturally, we find ourselves more in a position where we do have some cash on the balance sheet to spend. And if the market does decide to roll over, our stops are in place. So I do notice there's a lot of traders out there that after the markets had this big rally, here we are, we're at resistance. The inflation numbers are coming out as the market would like them to, a little bit lighter. And a lot of the setups have already been taken. Like if we go to some of these names like SMCI that we've been looking at, this one, granted, it is consolidating a little bit, but this stock has already had almost a 100% move from the lows just 2 months ago. Even like the Chinese group that we had been trading quite heavily, like Pinduoduo, for example. We pieced out of this trade yesterday, and look at this. It's pretty overextended, right? A lot of these big winners have been. So I notice when we feel like, we don't know what's going on, we have a lack of conviction, a lot of times what a newer trader will do is they'll be like, well, I don't really see much, but I got to do something, and they'll get positioned either all the way long or all the way short. I think it's pretty important. If you just don't see a whole lot, then just don't do a whole lot. It's very counterintuitive. Because in almost every other endeavor in life, you can't just do nothing. You got to stay moving. But in trading, you actually can do nothing. It's pretty remarkable how that often is the best course of action. The NASDAQ is trading down a smidge in the after hours, but overall, we're still above all these key moving averages, and the market is still uptrending. So that's the thing. The risk reward might not be so great. But heading into the holiday season, well, we're already in the holiday season, heading into Christmas, I've done this in the past. You short into a dull market, and there's nothing worse than the market just trending sideways, no catalyst. You're short the market, and it's the holiday season. So we've got the fact that the market's a little bit overbought, but we also don't really have any sell signals. So you just got to roll with the punches and take what the market gives you. This ARK Innovation ETF is approaching this top of the monthly value area. I do think that if the market is going to continue to the upside, it's likely going to be off the back of mega cap tech stocks, which tend to behave like treasuries. And remember, the treasuries have been rallying significantly. So at some point, I would imagine if TLT just continues this Cinderella run, we're going to start to see Apple move higher, and Microsoft is going to start levitating higher. And those more treasury-like stocks, those could be ones to take a look at. So let's actually check and see how those are doing in the after hours. Apple. This one's at a pivotal spot. You could draw in a little downward trend line, which I did over here. Take a look at this. And Apple's pretty much right on it. So is this a stock that is extended? Absolutely not. These key moving averages, they're all coiled around each other. If Apple starts moving to the upside, it's going to be almost impossible for the S&P 500 to move to the downside. So look to names like this. Also, we'll just close this bad boy out. Look to names like Microsoft that are also mega cap tech juggernauts in the S&P 500. Microsoft really hasn't had a run. We're above the monthly value area. Perhaps Microsoft goes up and kisses this 200-day simple moving average. It is definitely possible. We are currently long Tesla. And Tesla is doing something a little bit different. This thing's been in a horrible downtrend, right? Well, we actually just closed above the 10-day EMA for the first time yesterday in quite a while. And now we're above this 20-day simple moving average as well. So you can always look for candidates like this, that if we continue to move to the upside, these could play catch up. But if you're waiting for those cream of the crop growth stocks that are still a little bit too extended, I don't think there's anything wrong with just being a little patient. We did see names like AMC just zoom up to the upside. And this is definitely a good indicator of where the sentiment is. Typically towards the end of a big rally, that's when you'll get the junk stocks start moving to the upside. Speaking of these cannabis names, these have really been one of the worst areas of the market to be in for the entirety of the year. We can see that this MSOS is starting to break above value. Biotech, which has also been horrible. I believe that one is also breaking above value. We did have a red day today, but take a look. We're right on the cusp. So at this point into Christmas, I don't think there's anything wrong with just not doing a whole lot. You could always look for these opportunities as well. Let's take a look. What did we do today for our trading? Well, yesterday we closed out a bunch of these Chinese stocks. We'll take a look at those in a moment. I added a position in the NASDAQ yesterday. I was like, you know what? For the exact reasons I outlined. A lot of these premier stocks, they are a little bit extended. I just want to get long the Qs. So I took a position in just the plain old common stock, no adding leverage to it, nothing like that. I did that yesterday. Today I moved up my stop to break even. And then today I got long the SANM common shares for $66.89. We caught these right on the pullback that we had in the morning. And this stock, hey, if it wants to wow me, if it wants to impress and just blow off into Christmas, I'm all here for it. This one was pretty extended. We pulled back to this 20-day SMA. But if not, I'm just making sure I have a tight stop loss. And if this market rolls over, I can dismount from a lot of these positions pretty easily and not have some big drawdown or anything like that. Tomorrow we do have the NFP numbers, so definitely stay tuned for those. Those could be market moving as well. I would be watching the dollar index. Today we had a huge down day in the dollar, which is great. Dollar, is it arguably a little bit oversold? Absolutely. If the jobs numbers come out stronger than expected, we might see this dollar bounce. We might see bonds sell off. And in that case, I wouldn't imagine stocks are going to be super strong. But if the jobs report comes out a little bit weak, that's really what the market wants to move to the upside. So I think at the end of the day, just, stay patient, stick to your process, and don't get in a tizzy because the market is just going up. It's actually a good thing. With that said, that about does it for today's market recap video. Thanks so much for everyone for tuning in. Make sure you like the video, subscribe to the channel. We'll see you all next time.